Let's go. All right, y'all boys. Let me share my screen. I'm going to take out all this chaos so I can explain. Yeah, y'all boys can see me. Okay. Damn, how about this dirty ass chart? Okay, let's go. We're currently on the 5-minute time frame. We're gonna go mark out our London session lows, London session highs, Asian session highs, Asian session lows. So from yesterday, we had this uptrend, and then we get this retracement, and then price pushes higher, and then we fill this imbalance, consolidation, uptrend, and then we had CPI today at 9:30 or at 8:30. We had CPI, as you can see right here. Price was bullish. Off of CPI, we go and mark out, or off of CPI, we go and take out all previous draws on liquidity. As you can see here, we took out all these draws on liquidity just overnight. And then following that, it is expected after a key level like that's been made for a reversal and then for relief to fill that imbalance, or just some break in trend to the downside, because we just made all-time highs, taking out all draws. And then we see at 9:30 right here, we market open, and then I mark out 9:50, so I won't trade until 9:50. So right at 9:30, we get these equal highs, these relative equal highs, which tell me that price is possibly making a reversal. Now, what confirms this is the fact that we get a break of structure to the downside, break of structure, and then we get continuation. But price comes up, probably hitting equilibrium. Regardless, we get this continuation of this downtrend. And like I said, price would likely relieve this imbalance in the market. But what I was thinking, so as we made our London session highs, London session lows, we're going to go mark out other draws on liquidity. We had this draw. So in my mind, what I was looking at was, okay, we're waiting to hit key levels. We're going to get some relief, but likely if we made all-time highs, in my mind, I was thinking if we made all-time highs, why would we not hit key levels just to push even higher? Because if we were bullish on CPI, it would make sense. This was what I was thinking, to make sense to hit some key levels and then push higher. But in order for us to push higher, we need to fill this imbalance, taking out these draws on liquidity, including all the way up until previous session draws. the next draws after that would have been these. But what I was expecting was to hit these draws on liquidity and then push higher. So what I saw that we had taken out this key level and reacted off of it. And then we saw that price broke structure on the 5-minute, and then price broke structure on the 5-minute, and then we saw scaled down to the 1-minute time frame. We see that we have equilibrium. Price makes equilibrium, along with filling this fair value gap. But I guess it's not entirely. Anyways, so we get this break of structure to the upside, and then I enter. Yo, let me check to see if this was even the. Let me see what time this entry point was at, because I don't know if that's correct. See, I took multiple trades. That looks like a fucking warfare on this thing. But let's continue here. So on NQ, we had been making SMT. Price had been pushing higher on NQ. But you can see on ES we were not really moving. But on NQ we were. So I had along with equilibrium, I had SMT. That's what it was. So I had seen price drawn up off of equilibrium, and I entered, thinking that price may go and push up. Boy, was I wrong. So this was a great learning experience too, and I'll just save it for the end. But then I had really started just looking at, after this trade was invalidated, and that trade, I think that trade was like 500. And then after that trade, I had really been considering, maybe we really are going bearish. It'd be a good time to switch the bias, right? So I had changed my bias, thinking, okay, maybe we do want to go down, which would have been a great idea to actually follow through on. But I pulled out, and then I think I pulled out right here. So I pulled out almost, it's basically, you could call it break even, right? But not even break even, since we lost this trade. Then price continues pushing farther down. Then we get a reaction, and price, I had seen this reaction, waited for confirmation, and then I entered. Price, I think I pulled out of that one too right away. And then I had changed my bias to go short. So I go short, and then we make this 3 RR trade. I saw price come back up, and I was like, fuck, well, maybe we hit our key level. Because we did hit our key level. So off of this trade, I exited saying, oh, we hit our key level, let's go. I waited for confirmation. Now this trade, this was like my final hurrah, because I had waited for A+ entry, and now I felt like this was A+ entry. And let me tell you why. It's because we had hit this last key level, this final key level that after this key level, we have like these draws on liquidity that are farther down. And I felt like maybe these would be like maybe PM session, or maybe that would be a further in time. Price hits this key level. I wait for 5-minute break of structure, where we got this 5-minute break of structure. I enter. But let's go on the 1 minute time frame. So we had this 5 minute break of structure, and then we had price come down into equilibrium, right? See? But I entered at the 5 minute break of structure. And then price drops, filling a 5 minute fair value gap. Didn't even fill a 5 minute fair value gap. I'm telling you, the transformation of these videos when I look at this one versus when I look at the one from 2 months from now, I better be dragging my nuts. Anyways, price came down, price comes up, and I felt like, okay, this would be the time for this trade to get actually to go the way that I had intended, or in my mind had built up this bias. Price comes up, and then as you can see, we break structure to the downside to fill more orders to the downside. Now this absolutely, like, now that we go and recap, if anything, like, seeing this, I saw these draws on liquidity and I was like, these are great. These are great points for price to come up and take out. Now that I'm looking at it, this is like a high time frame bias. This is not something that's just going to get taken out today or overnight, or it might happen in PM session, but it's not going to happen right now. And price is taking out these draws on liquidity. I had clearly seen we made all-time highs, and then price break structure off of it. We had our nice liquidity sweep, but we were just going in the wrong way. Trading retracements in a downtrend. So as you can see now, we're probably retracing just to push even farther down. But with that being said, I did blow the funded account. I will be getting a zero account, and I'm not sure if you're familiar with a zero account, but the zero account, let me see if I can share my screen. Alpha Futures released this zero account, and it's a zero. Yeah, let me pull that shit up. Okay, so Alpha Futures has this. We have the standard plan, which I was trading on. I had the 50K account. Past that account, I was trading on my qualified account now. Then blown that account today. Then I saw, so Alpha Futures has a zero plan, which is what I plan on getting next. But the difference between this plan and the other plans is that this plan has a zero activation fee. But it has a zero activation fee. Similar as the standard plan, but just higher reset fee as well as higher monthly fee. But on the standard plan, you do pay $150 fee when you pass your account. You have to make that 4%, or this 3K. You have to make that 3K. And it's, so once you purchase the account, they start you off on this sim, or this demo account. Now you need to make 3,000 before they consider you as a qualified trader, and before you are trading with money that you can actually profit off of. So once you meet this 3,000 target, you get your qualified account. So that's the plan. And yeah, no, great learning lesson today. This just taught me further of like ride the, instead of saying, okay, we have taken out all previous draws on liquidity. I would like for us to hit these lows and then push higher. To say something like that, if this then that, I feel like I get ahead of myself, and then I'm looking at these retracements, and the retracement to me looks like maybe liquidity sweep to push higher, and then I enter and then I fuck myself over. Now, correction. We push past these draws on liquidity, making an all-time high. It would make sense for us to get some relief out of this. Therefore, we see, boom, liquidity sweep, break of structure, retracement. But in this time, if we look here, push past equilibrium. So we hit equilibrium, react off of it, and then push past equilibrium. Even this point of entry would have saved us a lot of headache. And this isn't even an A+ setup. I guess it is an A+ setup. If we had taken all key levels, hit all key levels, we have hit their liquidity sweep, made our relative highs, break structure to the downside, continue past equilibrium. Although fair value gap was not made, this is a high confluence bias. As if we have made all-time highs, it would make sense to get some relief. So a position like this may have been optimal to target these draws on liquidity. So that would have been the alternative. Whereas I was waiting for something that was just not coming, or not coming until a different time frame. But here you boys go. So, like I said, I'm gonna get the new funded account, and then we're gonna take it from there. But all of the recaps will be on here instead of TikTok. And let's go.